Inside Levi's stadium, the feeling is electrical. A taut hum in the air that holds and then erupts on cue. The final note of the national anthem, the sudden shock of a huge sack, the jets cutting overhead and splitting the arena in two. But the advertising Super Bowl, the one brands plan for all year, mostly exists somewhere else. On the broadcast at home, where the game periodically stops and the marketplace opens. In the building, the spectacle doesn't pause, but on the couch, those pauses are the event for some. This episode is about that marketplace, the cost of entry, who showed up, how heavily, what brands are really buying when they pay to be part of the biggest shared cultural moment left on American TV. Welcome to the Media Intelligence Podcast from WPP Media. I'm Kate Scott-Dawkins with Jeff Foster and Nidhi Shah from the Business Intelligence team. So I don't know if you can tell, my voice is a little bit hoarse today. I was actually at Levi's Stadium at the Super Bowl yesterday. Wasn't originally planning to be there, but it was my first Super Bowl ever. Definitely a different perspective versus sort of planning around a Super Bowl party at home or watching at home. So really interesting, I think, for me in this game of analyzing media and advertising to be in the stadium. Did you guys watch it all? I mean, I know it's not as big in the UK, but Jeff, did you watch it?
Yeah, of course. Started with the pregame all the way through the end. Yeah, it was a full day event.
Now, were you rooting for a particular team or?
No, I had no vested interest in this one, but it's just being a sports fan and a football fan. Of course, you have to watch just to hope it's a good game.
Yeah, I am a huge Niners fan growing up. They had Steve Young and Joe Montana come out and be part of it, and Jerry Rice. So that was awesome. I was rooting for the Seahawks on the day. I was with my cousin who's a Seahawks fan. And so that made it all the better, right? It's always good when your team wins.
What was it like being in the stadium? Because were there a lot more, pauses for like the longer halftime show, the commercial breaks?
No, in fact, the first half felt really fast. I said to my cousin, I think there were hardly any flags. There were like no penalties through the entire first half of the game. It was so clean. So it went really, really quickly. And then you get down into the final 30 seconds of either half, and there were a couple of what felt like unexplained pauses as it got into the final seconds.
Right.
But overall, really good game. I think walking into the stadium, being in the stadium, it actually felt less commercial than I was thinking it would. Because we're all invested in the brands and what the Super Bowl means for sort of that shared moment on television. I was a little bit surprised. Some of the logos on the stadium were covered up, right? Because they were Levi's sponsors, but not Super Bowl sponsors. And then leading up to the game, there was a lot of discussion about the prediction markets, notably Kalshi and Polymarket. Now, the NFL decided that prediction markets were not allowed to advertise in the big game. And so I was on a bus going there, look out the window, and they had a Kalshi skywriter. So they had written Kalshi across the sky multiple times. So definitely attempting to what some would call hack the Super Bowl. They also had a couple of trucks driving around or parked as you got into the stadium area, listing odds and things like that. So interesting. I was talking to a couple of people. It's interesting that people, even in sort of the ad world where we are, some weren't aware of the ban or weren't aware of the controversy. So that was interesting, just because I'd been sort of tracking that leading up to the game.
I guess that's a whole new form of out-of-home advertising in the skywriting that we might have to incorporate.
Yeah. The other thing was, again, riding down with people who were from out of town. Obviously, a lot of folks from the East Coast came out and pointing out how practically every billboard in San Francisco has the words AI on it. It's just a different. You go other cities and often there are a lot of cannabis ads on out of home or sports betting ads on out of home, and
Car
here
dealerships.
in the Bay Area, car dealerships, local stuff,
Right.
yes.
Yeah.
Here in the Bay Area and in San Francisco in particular, it's predominantly tech. And right now, all those tech billboards are talking about their AI offerings.
And that definitely bled into the Super Bowl commercials with all the
Yeah.
AI. Yeah.
I thought Gemini's was great. I loved
really,
it.
I really like that one. I thought that was very, very well done.
It's funny because I actually did that. We remodeled the house, and my kids wanted to see what their room would look like with this color paint or that color paint. So it was hilarious. It's like, that is an actual use case
Right.
in which I have used Gemini, and then it shows up in the Super Bowl ad. That was pretty funny.
Yeah, that was a cool one. Did you like the Chris Hemsworth Amazon Alexa one?
Loved Chris
That was
Hemsworth,
great.
and I like that they just took it head on, right? Like, if people are afraid of AI, let's not
Yeah.
beat around the bush. Let's just lean into it and show an ad featuring it. So, yeah, I enjoyed that one as well. The celebrity ones were good this year, right? I mean, if you're trying to get attention for a brand and want it to be memorable and you have this massive audience, I think celebrities still make a lot of sense. That was a big feature across a lot of ads. I thought Novo Nordisk was great with Keenan Thompson and John C. Riley. And then Ritz was the other one, the Mondelez ad with Bowen Yang and John Hamm. I'm a big John Hamm fan. I thought that was great.
Yeah, that was a really good ad too.
Yeah. What else? Halftime show. The halftime show was fantastic. The sense of Bad Bunny calling out all the names of the countries across both North and South America, I thought was super powerful. The stadium definitely reacted. I thought it was very well done.
Yeah,
Yeah.
it played really well on TV at least.
Did it? So could you
Yeah.
tell that all the grass was people in like grass costumes? Could you tell?
Yeah, kind of. Yeah, it took a second to kind of realize that, but
There
yeah.
were hundreds of them just standing there. So we saw them walking out. I thought they were going to do like a coordinated dance or something. No, they were just there so that they could part ways and like let Lady Gaga out or in or whatever.
And the marriage made the headlines right away all over X and Reddit.
Someone was asking, was it real? I hadn't caught up yet.
It seems to be, but
Okay.
doesn't I don't know if it's 100% confirmed, but it sure seems like it is.
Okay. All right. Well, interesting. We're waiting for all the official numbers, but I think hugely successful. There were a couple of whispers that definitely put it on par or even ahead of last year's Fox broadcasts. I assume we'll see that show up in the NBC numbers when we're doing earnings the next quarter.
I would imagine so, and of course we have the Nielsen, the big data and panel methodology now, so I'm expecting the numbers to be quite big.
Yeah, it was good. I mean, look, again, this is a cultural phenomenon, primarily in the US, yes, but everywhere. And I was looking back at some analysis we did a couple years ago. We'll have to see if we can redo this one. We looked at, yes, okay, there's a significant cost to running an ad during the Super Bowl, but what would it cost to get that same reach basically any other time? And this was in 2023. We estimated that it would take you for more than 400 primetime spots at a cost 3 times a Super Bowl ad to get the same reach. And even then, it's not concurrent, it's not contemporaneous, right? So it isn't maybe quite the same. So that points to why so many brands do this, right? Why it matters, why it does make good business sense.
Yeah, exactly. I mean, outside of the Super Bowl in the US and, Olympics, it's hard to find these type of events now. You're just not seeing it like with that type of frequency, especially on entertainment or a show finale or premiere like we
Yeah.
used to see. So yeah, I think that it would be really interesting to rerun that and see what those numbers look like now.
Yeah, for sure. I think we'll do that. I am so far behind now though. Like I am so far behind on the Olympics.
Do you
I'm
see the
so far
opening
behind.
ceremonies at
I
least?
haven't no, I
Oh,
was
okay.
also I was at coaching my kids' tournament all day Saturday for Odyssey of the Mind, and I am exhausted and I need to just sit and catch up on sports. I haven't watched any of the Six Nations rugby yet. You know,
Well,
these are not bad
plenty of
problems to have.
time.
Yeah.
Yeah.
Yeah, yeah, yeah.
The opening ceremonies were really well done. It's always fun to watch.
Yeah. Well, we'll do more on that next time. Let's fill in with some media owner numbers. Nidhi, do you want to kick us off with a couple of the commerce players?
That growth has been pretty resilient, growing double digits, as we expected in this year, next year. So, not really a surprise. But I think one of the biggest news I've seen in the last week is even traditional retailers like Walmart reaching that $1 trillion market cap and really entering the league with some of the largest digital media owners and largest globally digital media owners as well, people like Meta, as well as Amazon, for example. Now, talking of Amazon, we saw a strong set of results. Net sales growing double digits across not just North America, but also the international segment, but profitability is slightly different for the two. So operating margins higher for North America at around 9% compared to international around 2.1%. That was quoted to be due to special charges in some of these
Yeah,
markets. So a bit of a
yeah,
difference there.
I think a lot of the cloud revenue too happening, right? AWS revenue happening in North America, that's gonna help boost that profitability versus where it's more so the retail business, right? Which lower margins.
Absolutely. And advertising revenue really still continuing, reaching around $68.6 billion, not far off from what we estimated initially earlier in the year. So still making Amazon the fourth largest global media owner. And really they mentioned about in the call sponsored products, being their kind of largest ad offering in the year. They also mentioned about Prime Video ads, that contributing to revenue growth. We estimate that to still be relatively smaller scale compared to the retail media ad business, but they mentioned about the ad-supported audience really growing to around 315 million, which is up from around 200 million in early 2024, and really Prime benefiting from sports such as the Thursday night football, for example. And as always, there was a lot of talk about capital expenditures and that really accelerating. And that's a common theme we've been hearing about across other digital media owners as well.
Yeah, I mean, the numbers for next year on CapEx are looking crazy. Amazon's now looking at 200 billion, is that right?
That's correct. And if I look at the total for kind of players, Microsoft obviously being at slightly slower pace than the other Meta, Amazon, and Alphabet, that figure was around 410 billion for 2025. And estimates of around over 650 billion I've been seeing for 2026. So massive.
Yeah. It really comes down to, with that one for me, storytelling and how much this is where our sort of creative heritage of working within WPP and all the storytelling and brand work comes together with our, financial analysis world, right? Because every earnings call is basically a chance to put your story out to investors, right? And that's what we see reflected in the stock market every time after earnings. And I think a lot of this AI investment has come down to the best storytelling in terms of how the market reacts. I think Meta did a fairly good job of how they spun that. I think Alphabet has done a good job of talking about why and how it's benefiting them. If we steer to Alphabet quickly, and then we'll come back to Uber and some others. So Alphabet reported revenues exceeding 400 billion for the first time for the year. It was up 17% for the quarter in constant currency and up 15% for the full year. So again, double digits for one of the largest companies in the world. So pretty impressive. 5% of that revenue came from search and other. 10% from YouTube ads, 12% from subscriptions, platforms, and devices, percent from cloud, and then 7% from network ads. And really, I think, which this is what keep referring to this. It's nice when we've made our predictions in this year, next year in December, and then they sort of, oh yeah, look, we did well on that into the first year. Things like search growth accelerating, right? We've been talking for the back half of last year that we weren't expecting AI to be a search killer, that it was going to mean some shift in share within Google's products, or how we talk about search being different, but not necessarily leaving search. The company saw search growth accelerate to 17% in Q4, and so as reported, and that tallies again with our estimation that greater competition and innovation in search is going to lead to ongoing growth in that channel. The CFO, Ashkenazi, did say the largest contributor to search growth was retail, and that also aligns with our statements from the forecast, namely that companies like Shein and Temu and others were spending heavily to grow in markets outside the US following the de minimis rule changes. But what's interesting is going to be how sustainable that is through this year, as we're starting to see news reports, or I'm starting to see news reports, that there are a number of other countries around the world now looking at through our own sort of customs rules and some of those exceptions or exemptions for low cost goods as they're seeing an increase in Chinese goods flowing in, that they may follow similar customs rules. And so that will be, I think, something that we're paying attention to very closely this year and how the advertising dollars follow those rule changes around the world. We have a new figure for YouTube. Again, I always like to pay attention to new data points. $60 billion for YouTube ads and subscriptions together. So we'll do some more modeling on what that means. YouTube ads was up 8% in Q4, 11% for the full year, fell a little bit short of analyst expectations, but political revenue would have been a pretty tough comparable, I would think, in Q4 of 2024. So maybe we're just seeing some of that impact in the Q4 numbers from 2025. Yeah. Anyways, and then capital expenditures set to double basically in 2026 since we're talking. So from 91.5 billion to roughly 180 billion, close to that Amazon 200 number. So yeah, but I think they did a good job of explaining how the investment in AI is building in the ads product and the cloud product and leading to more orders, more companies, within Google Cloud and better advertising results. And so I thought they did a good job of telling that story.
Yeah, I agree. Listening to the earnings call, they did a very good job of kind of weaving in how AI is affecting all their products from more the consumer facing, like the Gmails and the YouTubes, and to, of course, the more B2B products. But I thought they did a very good job of laying that out.
Should we circle back to Uber as well? They were definitely present yesterday as one of the Super Bowl sponsors, both inside and outside the stadium.
Similar story, really, here. Total revenue growth, double digits again, 18% constant currency. Delivery, really the fastest growing segment compared to mobility, and their freight really being in decline for a lot of quarters previously as well. I think the key standout for me in this earnings call was Uber mentioning their advertising revenue run rate, reaching around $2 billion in 2025. Now that's double in a year. And for several years, Uber has viewed this 2% ceiling cap for its delivery advertising business, which has been exceeded now. So really signaling the fact that the business is scaling faster than expected. They mentioned in the call that small and middle-sized businesses already had that high penetration, while larger enterprises, brands really catching up on that, providing more growth for runway, especially in other kind of segments as well, like grocery, retail, and mobility advertising, while they're still quite nascent, those presenting kind of significant growth opportunities, but also this theme we've been talking about, consolidation and Uber trying to expand into more markets, and one such market has been the Middle East. Uber announced buying Getir's delivery business in Turkey as it pursues this expansion. So really scale benefiting those who are globally dispersed.
Yeah. Actually, I listened to that earnings call too. They did a lot of storytelling as well. I'm advertising for them. It was so much about how autonomous vehicles are impacting their business and, whether it's going to be growth driving and revenue driving versus deleterious. So they were definitely trying to put out stats around growth being better in markets where there are autonomous vehicles present and talking about offering Waymo rides, for instance, on their platform in cities like Austin or Atlanta. And then the other thing I pulled out that I thought was super interesting from that call, more in the world of AI, they were talking about their relationship and partnership with Nvidia and how they were going to offer ride data to Nvidia as they build out their own models for autonomous vehicles. This is fascinating, right? For companies that have all of this information on where pickups happen and where drop-offs happen and traffic and all the rest of it, right? That's a mountain of data assets that they are now talking about employing and putting to use in these systems. So it's not just now that we're moving into this world of sort of embodied AI and robotics and real world AI, it's not just text data assets, for instance, like Reddit's communities, right, that are valuable. We're seeing all these other types of data assets that these companies have, specifically in the world of physical AI, real world data, that are going to be important. And again, we're going to release it publicly soon. We talked about it in December's forecast, but this advertising intelligence framework that we're developing and rolling out and speaking about with clients, there is a scored element for real world AI because it's going to be increasingly important as we go forward. So that was one thing sort of piqued my interest in the Uber call as well. But it wasn't all just newcomers. We had, we might call the traditional media owners as well. Recently, we had Disney and Fox, didn't we?
Yeah, and Disney reported last week. Of course, the big story after their earnings was a new CEO was named. So Josh D'Amaro who ran the theme park division. So I think it will be based off of what they're signaling. I think it'll be a similar-ish strategy to Iger. Obviously, we'll get a feeling of how that plays out soon. But they gave Dana Walden, who's running creative now in TV and entertainment on the film side, a nice elevated title and salary as well. So I would expect that strategy would probably remain relatively the same, but we'll get more information on that. And Iger, as the rumors prove to be true, I think his last day is now in March. So his contract is till the end of the year. So the succession plan is going a bit quicker than some people initially thought. But back to the numbers for Disney for their quarter, which was their first quarter fiscal. The top line revenue was up 5% to $26 billion. Total advertising revenue in the quarter was pretty much flat. It was $3.25 billion versus $3.24 billion a year ago. Of course, Disney has changed what they disclose now, so they are disclosing very little about the television business and many divisions as well.
I mean, they've elevated the parks head, right? Tomorrow was the head of parks and experiences to the CEO role. This shift over the last, 10 to 20 years from where profit was coming from in the business, which had been primarily the media side of the business and now is primarily the park side of the business. Disney's an interesting one, right? It's seems to be very important for them to continue to have direct consumer relationships because that data can feed the things like parks and cruises. If you know someone is particularly watching a lot of Mandalorian and you can
Right.
put them into we're opening this Mandalorian experience at this park, that makes a lot of sense. Whereas for some others, I'd say, Warner Brothers, Paramount, it could go back to being more of just a content production and licensing business. So I'm curious what Disney decides to do there, right? Like
Yeah.
the existing model is going to be expensive to continue to acquire and retain all those streaming providers unless they can find a good data sharing and data ownership model where they are primarily just licensing. I don't know.
Yeah, no, I agree. I think, yeah, that's definitely something to keep an eye on. This will kind of bleed into Fox's earnings, but we're seeing an increase in sports rights, which is beginning to impact profitability. Of course, this is before a major NFL renewal, which would also impact ESPN. So I think, the new CEO, you might have this dilemma. Do we want to exit the sports business well before it starts eating into profitability, or do we want to keep that since that's still a draw for advertisers? So it's going to be a very interesting decision to make. And I just did a quick check before our podcast, and just looking from a revenue standpoint, the experiences and including the theme parks and cruises is up to almost about 39% of revenue. Just slightly behind entertainment sports.
Yeah.
So it's almost as big of a business from that standpoint.
And a bigger driver of profit now, I think, right? So, yeah.
Exactly, and
Yeah.
profitability. So it's going to be very interesting to see what these decisions look like. Yeah, probably not a coincidence that we're getting less disclosure on the television entertainment side of the business. So yeah, we'll see what that signals.
It's not just us. I mean, we get a lot of analyst notes too from people that cover the markets in these companies, and there was a lot of commentary about how opaque those disclosures are getting now for the media business.
Yeah, exactly. They're not given too much, although it was interesting to point out they did say the SVOD services grew 11%. uh, versus the prior quarter to more than 5 billion. And then the operating income grew approximately 190 million to 450 million. But the interesting thing, kind of buried in all the details, was that a lot of this was due to subscription fees growing. As we all know, in October, Disney raised the prices in the U.S. by $2 to $3 a plan. Advertising, which is now advertising and other revenue, was only up 4%. So indicating, a lot of this growth is coming from price increasing, and we'll
Pricing on
probably see,
plans, yeah.
yeah, we'll probably see more of that. I think obviously the ad tier is still in its early stages, but yeah, we're seeing more of the growth coming from the pricing side.
I didn't see anything that they mentioned about this, like, Sora 2 partnership. Was there anything around
talked
generative AI?
they talked a little bit about it on the call, just, expressed excitement. Not a lot of details were given about how that'll actually flow through revenue or advertising. They touted their AI powered planning tool and video generator to improve advertiser engagement, but there wasn't a lot more disclosed beyond that. So it's a little hard to parse what exactly that is and how that will operate.
And, Fox?
Yeah, so Fox, similar story with, especially on the sports side. For them, the total revenue was up 2% in the quarter to about 5.2 billion. Of course, being driven by Tubi NFL games with higher pricing and news as well. So this was the other interesting part too. With the second quarter net income fell to 247 million, and they attributed that to higher sports NFL rights and college football as well.
Mm.
So we're beginning to hear, obviously, sports is very important in the TV ecosystem, but the rights are continuing to increase, which is affecting profitability.
Yeah, the cost was mentioned in Comcast's
Yeah,
Q4 as well. We talked about that with their first NBA games as part of
exactly.
that
So
quarter
we're
too,
beginning
yeah.
to see this come up a bit more in earnings, and analysts are definitely asking questions about it. But it was interesting too because Fox, for the ad revenue growth, saw 1.4% versus very tough comps from a year ago. Looking at our model, if we excluded political, we'd probably be closer to a 13% growth for the quarter, which is amazing. Again, very heavy NFL college football quarter,
Yeah.
so you would expect that to have an impact. And then the other interesting thing was Tubi revenue grew 19% in the quarter. Now, on a calendar year basis, that was its lowest growth level of the calendar year.
Yeah, decelerating.
Yep, and Tubi total view time grew 27%. So total view time growing higher than revenue. And they did mention that they're seeing healthy direct response and partner trends, and also direct advertising trends with bigger clients, kind of suggesting that a lot of the revenue is still coming from more the direct response side,
Mm.
which was interesting to see. So, I'm assuming that if you get more engagement with some of the bigger clients, you may see those numbers go up or try to increase on the CPMs.
Yeah, okay.
But they did mention a couple other things. They did mention the World Cup will be profitable. They were asked that question. And then this was, again, pouring into the sports rights that Lachlan did mention that we got asked the question of if they do renew the NFL and it is at a higher cost, what would that trigger? And he did say that they would look at balancing or rebalancing the sports portfolio. So basically saying maybe get rid of some sports, just put that money back into the NFL, or find less expensive rights deals would probably be the interpretation of that. So I thought that was an
Yeah.
interesting one that is kind of getting out there now. And then one last point where they shed some insights into the categories that they said they're seeing increases in the financial, pharma, retail, CPG, and automotive are significantly up, which would make sense, especially with a heavier sports portfolio. That's knowing that big, large advertisers are a little bit more invested on the TV side versus digital. We expect to see something like that. He did say that entertainment was down modestly because it's just movie premieres. That was the quote. so so that was some other interesting insights from the category part from their earnings
Little
call.
surprised about automotive, actually, given you have, Tesla canceling a couple of their models. You have increased tariff costs for car makers in the US. You don't have the influx of Chinese OEM money coming in like you do in Europe and South America. Yeah, I guess I'm a little bit surprised, but yeah, the sports there do tend to be pretty endemic to sports.
And also to note, when they include their advertising, they also include sponsorships like a pregame show or halftime brought to you by a Toyota, a Ford, for example. So which you tend to see a lot of that in sports. So that might explain a little bit of the auto
Yeah,
numbers.
although that's the other place I think people are going to be talking about rebalancing are these brands that have had these long-standing, like we've talked about with Toyota,
Yeah,
not continuing with their Olympics
Olympics.
sponsorship, companies looking at, because the increasing cost of sports rights flows down into sports advertising and where they're making those bets. So yeah, I think we'll see more of that into this year as well. Final notes, Nidhi, anything else from you on Europe or anything else?
It's been interesting to see some new stats on the AI usage in Europe. Eurostat mentioned nearly 35% of enterprises using AI for marketing and sales, with more larger companies using it versus small and medium sized. That did make me go into an exercise and a question: does this mean we could see kind of more budget shifts, especially from spending on advertising into AI infrastructure investment, specifically from larger companies, and what that means? Don't know if anyone's got any initial thoughts.
Yeah, I mean, I think everyone is certainly plowing in at this stage, figuring out how they can use it, what's going to be the best efficiency driver for them across a number of fields. This was definitely called, I think, the AI Super Bowl by a number of people in terms of the number of companies talking about AI and its use cases as well. And I think right now the field is still pretty open, right, in terms of maybe companies trialing a few different providers for AI. We won't get into it here. We don't have time. We definitely saw a big market reaction to some of the coding and more software related AI skills across stocks last week. So I think we're going to see more of those types of fluctuations as businesses start applying it more and more. It's certainly not a panacea or a one sort of apply it and done thing, right? And especially for human-based businesses and creativity-based businesses. I think there's lots of runway for augmenting and applying AI in a way that allows continued growth. I've said this before. With advertising, we've been applying things like machine learning to make buying and optimization and measurement more efficient for a decade, and yet we, are still employing hundreds of thousands of people. So I expect that kind of trend to continue, right?
Yeah, and when I did the exercise, just looking at some of the largest global media owners, but not from a media owner perspective, but how much they spend on advertising as we see capital expenditures grow, that share of total advertising has remained broadly stable, particularly compared to last year. Now, while advertising expenses haven't been growing as fast as capital expenditures, they've still been growing as they, look to attract new users, for example, in new markets and elsewhere.
Yeah, we didn't have time to get into Snap. We won't get there today, but I think I was curious that they were signaling kind of even greater efficiency, especially with marketing, when I think they've been struggling to grow at the same pace as some of their peers, which yeah, I would have, I think, expected to see a greater emphasis on advertising and growth for users rather than an efficiency message there. But we'll have to dig into that next week because I think we're we're out of time for today. It's already run long. But thanks everyone for listening to the WPP Media Intelligence podcast. Don't forget to subscribe. And if you have any questions for the show, you can email us at business.intelligence@wppmedia.com. The Media Intelligence podcast from WPP Media is meant for informational and entertainment purposes only and should not be considered financial advice.